If you're trading on the speculative end of the ASX market, you've got to understand how to interpret mining results. The first thing you need to do is understand the grading of each mineral and ore. I've put together this spreadsheet of the most common minerals that you'll find being drilled on the ASX and its corresponding low, medium and high grades. A common mistake new traders make is that they'll rely entirely on the grades of a drill result. There are two other factors that make up drill result announcements that need to be considered. Here's the grades. You need to consider how deep the intercept is and how thick it is. So this is what a drill result will look like. You'll get multiple strikes and it reads like this. You've got a 2 meter thick strike at 39 grams per ton, which is your grade. And this is the mineral, in this case gold. And the drilling, or this intercept, gets hit from 240 meters. So between 240 meters and 242 meters, you have this amount of gold on average. So why is depth so important? Well, the deeper a mineral is in the ground, the less economical it becomes to mine it. After 250 to 300 meters, typically it gets quite challenging. There are obviously different types of rocks and they're situated in different parts of the country, but a general rule of thumb is the deeper you go, the more challenging it is to get to the resource. So the more challenging it is, the more resources are required and the less profit you get out of that mineral that you end up mining. As a general rule of thumb, anything under 100 meters deep is quite economical. Anything from 100 to 200 may require some medium grades with decent intercept thickness, and anything from 200 to 300 meters is quite deep. Now the last thing we need to look at is how thick the intercept is. If we have a bonanza grade gold strike from 40 meters deep, which is actually quite shallow, and is 2 meters in thickness, is that actually a good result? The answer is, it actually depends on the rest of the results from the drill campaign. A single strike result won't tell you anything on its own. Here we have a really high, strong bonanza grade strike. Even though it's thin, it's still considered a bonanza grade, but the rest is actually quite thin. So the intercepts are really quite thin and low grade, despite the fact that they're all relatively shallow. Now this is a very common trap for new traders to fall into when they're looking at mining results. They see a high grade or bonanza grade strike and it'll be in the headline, but they'll fail to recognize that the rest of the drill result is actually quite poor, resulting in typically what would be a sell on the news. And a sell on the news here would typically be a trader entering first thing in the morning on market open and then instantly watching their capital just disappear as other people more clued in on the results will just sell down. Now that we have a basic understanding of how to read the mining results, the difficult part is to put a value on what you're looking at. Let's say we have a company that comes out with these two drill holes from a mining campaign. They have pretty thick intercepts of low to low medium grade gold, and it's all quite shallow. Are we looking at a $5 million market cap company? Are we looking at 15, 20, 30, 50? What's the value of this business here? This is where I can't help you through YouTube anymore. You need to put in the hard yards yourself to understand the value of a business. Now I can quite comfortably say that results like this are quite similar to a company like ARS or Alt Resources, and they're valued around 12 to 14 million market cap at time of recording. Now they have multiple tenements and they have very, very similar drill strikes to this. So if I see a mining company release results like this, I have at least one company that I can compare the results to, and I can quite comfortably say this market cap value can be applied to this company. For those of you who want to take mining results seriously, here's a bit of homework for you. Have a look at SRN. Have a look at the historical grades. Have a look at what was being expected of the stock. And have a look at what happened when the results actually came out and what resulted in the tank. This is SPX. Have a look at the drill results and the impact on the share price, and have a look at what was expected here in early March. For RXL, This is located next to SPX, so compare SPX's results and market cap to RXL's results and market cap. This one's a little bit older, AZY. Have a look at what happened here in mid-October, and then research what happened with the drill results and what caused the subsequent bust. And for something that's not gold related, have a look at what happened to CML. Research what infill drilling is and what caused these two significant pumps to occur and subsequently dump. Once you do the research for all the gold related stocks that I just mentioned, you'll have a very good broad understanding of the speculative end of the market when it comes to specifically trading gold junior microcap stocks. Now this video focused quite heavily on gold as the primary commodity that we looked into, and that's because gold is the one commodity that's actually breaking out to the upside and is looking quite healthy in the future. It's because of this that we'll most likely see more junior explorers trying to strike it rich. So naturally, we'll start seeing more gold related announcements come out. There's no point looking at things like uranium and zinc when the market's really not that hot. So I hope you enjoyed the video. Please give it a thumbs up and subscribe. Otherwise, good luck in your trading.